Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 16th of August, 2023. Thanks for joining me today. This is episode number 2517. A reminder that derivatives trading, because of the leverage, is not suitable for all investors. Past performance is not necessarily indicative of future results. So, following our process, and we're all about process. Well, first of all, let me ask you, how are you doing? It is Wednesday. How was yesterday for you? How's your summer been? It's starting to cool off in the mornings here in Chicago. School starting the end of this week, so it seems like the summer doldrums are behind us here right quickly. So we're getting into the busy part of the year. Here's the conversion trading pre-market summary sheet. Again, you can grab this off of the Twitter feed by going to twitter.com/conv trading. Make sure to follow and set alerts so when it drops, you got it. This morning, the overall market posture is mixed. You can see that the Russell's basically unchanged. The Euro Stocks 50 are unchanged. The DAX is unchanged overnight, with the S&P falling about 9 points, the NASDAQ 36 points, and Dow 57 points, about 2 rotations each. Overall, just the markets are just kind of hanging out near the lows across the board, except for the S&P, which is trading a fair amount lower, almost 10 points lower. So that's where we stand. Before the open today, we had several earnings. Let's see today. Several earnings. We had JD.com, which is quite gigantic, 39.708 billion. It beat by 12%. JD came in at 74 cents versus 66 cents. The big one, the big box stores, Target, coming in with a revenue miss at 24.773 billion versus 25.18 expected, but it beat by 29.5%. It beat by 29.5%. Remember, the retail numbers yesterday were pretty strong. They came in at $1.80 versus $1.39. And then Performance Food and others came out. After the close, we're looking for Cisco, Avnet, and Amcor. Cisco Systems expected to report $1.06 and 15 billion. And so that's the earnings side. Who's left? Is Home Depot left? Is that who's left, or is it Walmart? I think it may be Walmart that's left. I don't remember if Home Depot reported or not. Too much information. Overall, more negative news out of China. China just really dragging things along. The Chinese house price index was lower than expected. UK CPI higher than expected. That's also negative. EU industrial production higher than expected. GDP in line. And building permits are lower. Housing starts higher this morning. Those are the numbers that came out at 7:30 Central, 8:30 Eastern. Building permits. What's going on here? Building permits. Okay, building permits came in at 1.442, expected at 1.463. Housing starts beat slightly, 1.452 million units versus 1.448, both higher than the prior. At 9:15 this morning, we get industrial production cap utilization, and then we get the EIA crude oil inventories and gasoline inventories. The crude oil inventory is expected to be a draw of 2.32 million barrels if you're trading those products. We also get heating oil, refinery runs, and distillates, and so on and so forth. But the big number, or the big release today that the market's anticipating, is the FOMC minutes, expecting a reaction on that. FOMC minutes coming out at 2 o'clock today. just make sure you save your bullets for that. Until then, I'm expecting the volume and the range to be pretty choppy, and it already is. If you look at the stats on the ES overnight status section of the sheet in front of you, you can see that in real time, the volume is 175,000 versus 270 plus thousand yesterday. It's already pretty quiet. It's a multi-distribution profile, but really the market has been balanced overnight. In the S&P, inventory is 15% long, so it's pretty balanced there as well. The point of control shifted almost to 44.50 at 44.54.50. So we've moved the auction lower, and we'll talk about that here in a minute. But just observe that it's pretty light and it's pretty choppy this morning, and that's expected to translate into tomorrow, today's trading. Okay, so that's our convergent trading pre-market summary sheet. Again, FOMC at 2 o'clock, expected to see some reactions. Let's take a look at the technical side of things. We're seeing a little bounce here in the bonds and notes. Bond and note futures, they seem to be holding an excess low and holding steady here. These products appear to be looking for a little bit of a bounce. Was looking at that this morning. The Japanese yen getting pummeled a little bit and just unable to get off the floor. Crude has been strong, as we already know. Natural gas has been relatively strong, although natty gas has taken quite a beating from the levels we were at during the right after the Ukraine war. And let's go clear. But let's jump to what we really want to talk about, which is what the auction is doing in relation to the S&P. So essentially, we've moved from this upper balance here where we were grinding up in this trend line. We gapped down, we formed a lower balance, and we've been holding this lower balance and sitting sideways for quite some time. The point of control of this area is 44.90, 44.91. The key price zone that we're watching here is 44.90 to 93, 90 to 93, something I was talking about quite a bit yesterday and the day before, right? That was Friday's double TPO high, and then it became the key magnet in this area. And yesterday what we did, and I talked about, hey, we're opening slightly weakish on the S&P as long as it doesn't take out the 90.93. This is the plan from yesterday. As long as it doesn't take out the 90.93, we're looking short, and we're looking to attack the 69, which is the low of Monday, and the 59, which is the low of last Friday. We're likely to continue lower, and the key target below becomes 44.20. Okay, so that becomes the next key test area. That's the next point of control. So we're moving from a point of control. We basically moved into a low volume node on the composite yesterday at the low of about 44, 47, 44.50. We have the mid-century figure at 44.50, which is where we're stuck most of the morning. And we're starting to work ourselves down to the 44.20. So to me, I expected balance. The Monday close was a very clear excess at the low with single prints, finishing at the high. This is like a golden opportunity for buyers to float this thing up back into the 45.50 area, retest the entire range, potentially all the way up to 45.60. And they failed to do so by opening below the point of control yesterday at the low end of value. And then as soon as it opened, You saw that it pushed to 90, 91. Yesterday's high, I think, was 91, right in the middle of that 90, 93 key zone that we talked about quite a bit. It pushed into 91, and then it was unable to get and hold VWAP or anything. So if you're a Convergent member in the Mavens channel, you heard me talk about just looking short, looking for opportunities to get short, looking for areas to lean short, short, and that's what that was yesterday. So we ended up balancing quite a bit in the afternoon, and then releasing to the downside later in the session. And finishing quite weak. And then this morning we have a small gap. We're trading below the low of 44.47 from yesterday. We're trading at 45. We still have about 18, 17 minutes to the open, but we're opening at the low end of yesterday's range, and that's what's important. We're opening at the low volume node. So to me, unless it starts to work itself back above 44.60, and even then, I'm not too confident about getting long unless it works its way back to above 44.60 and then gets through, the 66 or so, the point of control of yesterday, and so on. This thing is really more of like selling pullbacks into 44.20. That's the big picture. Again, the 44.20 remains on deck unless we take out what price? What price range do we have to take out in order for 44.20 to fall off as a probable test, and 45.60 gets back on as the probable next test? What do you think that is? Unfortunately, YouTube inserts like a 20-second delay, and I just can't sit here silently. The answer is, as long as we are below 90 and 93, we're looking for 44.20. It's that simple. It's just that's what we're going to look for. And if it clears 44.20, we're looking at 44.04, and then we're starting to work ourselves back through these lower prices. That's the S&P in a nutshell. Why isn't my escape key working? I don't get it. Let's see. Oh, my keyboard's not working at all. It's because it was off. All right. So there we go. So here's the NASDAQ. The NASDAQ's a different animal slightly. The NASDAQ put in a lower high, higher low. We had an inside day. And if you recall yesterday when we went through the NASDAQ, I told you, hey, the NASDAQ is opening a P-shape. That's a pretty classic reversal type day. It's a very bullish day. And the expectation is that, all things being equal, China not being in a picture, yesterday we would have taken out, in my opinion, the 73.50 and pushed to the next key area up, which I'll go over in a minute. But the NASDAQ held its own pretty well. It had a pretty decent short in it early on, which I talked about in the Mavens channel on Convergent Trading. But it was really difficult to hold on to those shorts. I think the short was 15,198.50 or something, and looking for it to fall through the single prints, and what it did is it ended up going to like falling to 80 something, and then shooting up to 212, then falling through, and then finally it ran, which was very frustrating. But the NASDAQ, that makes sense to me because the NASDAQ was actually in a much stronger relative basis. It was much stronger than the ES versus its prior day. Look at where it's opening. It's opening right at the P, whereas the S&P opened below value from the prior day. And so we ended up with an inside day in the NASDAQ, and the NASDAQ's exhibiting strength. This morning, however, it is trading at the low of the prior session, so it's in the same position as the S&P coming into today's session. But overall, the NASDAQ would be expected to be below 14,850 at this point, way down here if it had kept up with the S&P. So the NQ S&P spread is not stable at the moment, and the components, and that's important because the components, the biggest components of the NASDAQ are the controlling components in the S&P, but not as much. The S&P is much more diversified than the NASDAQ is. The NASDAQ is very concentrated. And so that's where we stand. So this morning coming into the NASDAQ, we would have to clear 15,200 for me to get bullish right up here, 15,200, this zone. And the target for the NASDAQ is right here at 30. What is it? What's the price that I posted in the channel? 30 to 50. So 330 to 350 is the next key test area in the NQ. Right here. 50, 30. That's these lows right here. And this zone, this area right here. I'm expecting the NQ to contest the selling unless news comes out. But you know, so it's you have to be patient. You have to kind of be lax with your stops a little bit. In other words, don't choke the trade too quickly in the NQ. But if the NQ clears these lows, I mean, yesterday, the day before, it took out the low by 2 points before bouncing back up. If it takes out those lows, that low there at 37.35, we're likely to see it flush pretty quick. And in that case, we're likely to get through the 15,000, which has some single prints in it, pretty quickly and start working ourselves down into the next key target, which is the 850 in the NQ. So as it stands now, the skew is sell side unless we get above 200 in the NQ as well. And until then, I'm just simply the trend or the winds are blowing in the direction of shorts, in my opinion, overall. So that's where that stands. Looking at crude, crude did what was expected yesterday. Remember when we opened, we're like, well, it's checking the prior range, and as long as it stays below this 82, 30-ish, 25-ish area, I would expect it to work through and get this weak low, that's double TPO low at 80.34. Look at where it went, 80.40. So yesterday, crude did the job, and then this morning it's opening in range. It opened at 81.15 here, and it's tested down, and it's pushing higher. It is above, you know, it's against its settlement, but it's above value, so it's a bit tricky. This zone here between 82.25 and 81.25 becomes really important in terms of how the market's going to progress through here or auction through here. But overall, crude is in a downtrend. We still have one-time framing down, and if it gives up yesterday's point of control, it's very likely to take out the 80.34. I expect a bit of a flush through the 80.34, and I expect it to move into 79.80 pretty quick if it takes that out. So those are all your products. Good luck today. Don't forget to hit the like button. Don't forget to subscribe to the channel. If you have questions, always pop them into the live chat. I'll try to answer them as we go along, and I appreciate you tuning in. Okay, take care.